Good afternoon, everyone, and welcome to the Market Close Report for Friday, the 6th of February. Happy Friday to you all. Well, the market had an ugly end to the week. Unfortunately, the opening week of February, a pretty hefty decline today. It was the worst day that we've had since April 2025. That was Liberation Day in the US, when fears of tariffs started by President Trump kind of were at fever pitch. So we basically had the ASX 200 today down 180 points or 2% to 8,708 points. We were a little lower than that with not too long left to trade. So the market did pick up a little in the dying stages, but really over the course of the day, losses generally did worsen. It also means that we're down for a second day. The market fell 2% this week as well, and the declines were really widespread. In fact, all 11 sectors were down. 98% of stocks on the market also went backwards, so it was pretty hard to find any winners on the market. There really wasn't one single driver of the action on the market today. We did see US markets falling about 1.5% last night. Also, futures pointing to a potential decline in early trade in this evening when they open. We also had commodity prices mostly lower. And over the week, a lot has happened in markets. We had President Trump, of course, seems like ancient history now, but last weekend essentially appointed Kevin Warsh as the new Fed chair. He's expected to replace Jerome Powell in May when his 8 years in that position expire, but he's considered to be a candidate that might not be as dovish as others perhaps, so essentially meaning that he might not cut rates as aggressively as some of the other candidates. That fed into the US dollar essentially strengthening, commodity prices falling, and that was one of the reasons why the mining sector really struggled this week, falling about 4% in just 5 days. We also, of course, had the Reserve Bank raising interest rates for the first time in more than a couple of years. That was on Tuesday, with potentially more rate hikes to come. CBA reckons the next hike could be in May. We also had flaring US-Iran tensions, and the tech sector had an absolute shocker. I mean, our tech sector was down 12.5% just this week, and that worst that we've had in approximately a year. And the catalyst there happened a couple of days ago when we had a new AI automation tool which was announced from Anthropic, a US tech company behind Claude, which essentially means that it will help automate a number of legal and research tasks as well. So that kind of spooked the market a bit, because what it could mean for other software companies around the world. So that was quite widespread, not only in Australia, the declines, but elsewhere. And then Amazon last night came out with some results, essentially saying that it's going to spend $200 billion on investment, including on data centers, chips, and other equipment. So again, markets perhaps and investors asking questions about when are they actually going to see some returns from that. So a long list of things took place across the market today, though. All 11 sectors fell back. The worst performers included property stocks, quite an interest rate sensitive area, down almost 4%. Also tech companies down more than 3%. We had consumer discretionary down about 2.5%. And some of the better performers, which is difficult to even say when you've got declines of more than 1% everywhere, were some of those defensive areas of the market. So that takes us to the best performers of the day. ResMed was one of them, very much considered to be a defensive stock, down up 1.2% rather. This is a company that sells those sleep apnea masks. Brambles, the pallet maker, up 3.5%. PEXA Group was up 1.1%. And Rio Tinto seems out of place here, because it actually fell, but it only fell slightly by 0.03%. So that was quite an outperformance compared to its larger peer BHP, which was down 3%. And if, in fact, all other miners on the ASX 200 were also in negative territory today. So it was the best of the mining stocks. Now, the reason for Rio's outperformance is that it's decided to abandon merger talks with UK-listed Glencore, which would have created the world's largest miner. And that was due to a disagreement on price, amongst other things. So the reason why it wanted this merger was essentially to bolster its copper portfolio, which Glencore has a significant one. But market seems to be perhaps letting out a sigh of relief, because a tie-up would have been complicated. It would have been timely as well, lengthy and expensive process. So markets seem to celebrate that. There were losers on the market today, a lot of them. Webjet was the worst. It fell 29.5%. This is that hotel room aggregator, said that its Spanish subsidiary is being audited by the tax office. Deep Yellow, the uranium miner, one of the worst as well, 12% lower today, but keep in mind it was the best performer in Jan when it rose 54%. REA Group, which is behind realestate.com.au, down almost 8% today. It actually came out with its half-year results, fell short of expectations, and that's despite revenues, profits, underlying profit and the dividend all improving. Also looking forward, it anticipates a dip in listings, the number of properties going up for sale, particularly because of Perth and Brisbane markets, and also higher interest rate environment maybe not helpful there for the company. A reminder as well that when companies are releasing their results, they fall short of expectations. They're not overly optimistic about what's ahead. It's not quite normal to see share prices falling by 5 to 10%. That's what we've seen today. And DroneShare, which has been a big mover in both directions recently, down in the order of 9%. Now, looking forward to tonight, that important jobs report, which was meant to be out tonight, is being delayed until next week, and that's because of the partial US government shutdown, which has just delayed things a bit. Looking to next week, the profit reporting season here in Australia is just going to ramp up a notch. We're going to have a lot of companies out with results in the financial space. CBA, IAG, AMP will all be out with their results. We've got ANZ and also Westpac out with some quarterlies. Plenty of gold miners, healthcare stocks, retail companies will all be out with earnings. The US earnings season is going to quieten down a bit. We'll still get Spotify, Shopify, Ford, and others out with their results, and some important US data on both inflation and also jobs will be out next week. Keep an eye as well on the election in Japan this weekend. The new prime minister there is call that snap election to basically capitalize on her popularity. So if things go pear-shaped for her there, that could have an impact on markets. As far as currencies go, the Aussie dollar is stronger against most. It's sitting about 69.5 US cents. On that note, everyone, have a fantastic weekend. We'll chat to you again next week.